Hi, this is Mark with my analysis for the week commencing the 12th of April. Once again, we have a fairly busy news week this week and some important news for the pound on Tuesday and USD. The main things as the week progresses, we have on Wednesday the euro minimum bid rate. Nobody's expecting any changes, but the ECB press conference afterwards could be a lively affair again because they are currently printing 60 billion euros a month and pumping it into the economy. And if Draghi was to say anything positive about it, that it's working, etc., then it may give a mini boost to the euro temporarily. You've also got the CAD news that day. This week we have G20 meetings, we have IMF meetings, so there's a lot going on, but it is tradable. And I'm going to show you now some suggestions, some ideas for the week ahead, and also to show you how we adapt to changing market patterns. For example, this is the USD Singapore dollar. I could have shown you the Euro USD, the Aussie USD, the Pound USD, and a number of other pairs, but last year we started to trend in lots of markets, and the other pairs I mentioned were going down in a clear channel, and this was going up in a clear channel. And the way that you trade this kind of setup is you are simply looking for bounces back off support areas, namely this bottom trend line. Now we do look for as many reasons as possible when entering a trade. So we also look for Fibonacci levels. I look for EMAs, and a lot of people don't like EMAs, but I do, and the reason I use them, for example here, this is the 34 EMA and it's interweaving with that support line. But what it means is that when you come to place a trade, you can put your stop just below the EMA. And in this case, that middle figure, 30 odd pips. So you're risking 30 odd pips for a potential gain here of 300. You do not need to win many trades to be successful trading Forex if you can pick these big moves with small stops. And it happened here, and it happened here, and then we had a loss up here. And the way I play it is if we're trading with the trend, I take full lot sizes here and I half the risk when I short. But on each of these occasions, guys, there were 300 plus pips on offer, all for small stops. The more conservative amongst you could place your stop below the 55 EMA. The other thing to note here, both these EMAs are equidistant apart. We're clearly in an uptrend, and we were staying in an uptrend. Then it started to roll over, and we're now in that indecision period. So how do you trade indecision periods? This is a CAD on a weekly, and I've shown you, if you go back and look at my previous weekly analysis, every fortnight I have been explaining to you ad nauseum why I continued to long here on the Canadian dollar, and it did it again last week. Now this is my son's demo account. He's learning how to trade. He caught this one, I think it was on Thursday, Friday of last week. It was at one point up 260 pips. It's fallen back now. It's only 140. So he's moved his stop. But the way that you're playing these guys, again, these are excellent risk-reward trades because you only need to place your stop just below the recent low. So that's 60, 70 pips away for a potential gain of 350 plus. So once again, the risk-reward ratio here is awesome. And equally, for shorting purposes, all you need to do is go above the recent high candle and half stake because you're going counter trend. Remember, this is still a major uptrend that's been going on for 18 months now. But this is a valid way to trade. Now, I'm tempted at the moment to move this down a little bit because you can see here on two previous occasions, we've just missed that area. And this is why we have the take profit below that area. So now I'm looking around 127.80 for shorts, stop 60 odd pips away above the recent high, and then you're looking once again at potential 350 pip gain back down again. And this is all you're doing, guys. When prices start to range, you're looking to short at the top and long at the bottom. Now, the more conservative amongst you, if you don't like that method and you only want to trade with the trend, then A, you need lots of patience, but B, where would you look? And here is the obvious area on a very simplistic chart. This was a major trend line that goes back to last year. And if price is going to pull back anywhere that it's going to stop, and it also happens to be around 120, 100, a whole number, and I would then start to fib and look at EMAs. And on the subject again of EMAs, this is this trade from last week. And the beauty of this was that when this trade came back down, this was here after a news announcement spike, but you've got the 55 EMA as well supporting you, and all you were doing, as I showed you before, you were placing your below the 55, but also below that recent low down here. So that is the way to play range bound trading, and at the moment we have a lot of ranges. And back to the subject of this USD, what we did do, we've longed this again, because if you can see here, we had an area of support and resistance again. So this was an area of support and resistance. It started to move back up. The EMAs, everything started to roll back up. It's currently around 70 pips in profit. I'm going to be tempted Monday morning. I think what we should do is move our stop below Friday's candle, because it may come back and be taken out. But at this moment in time, for me, this has been a huge up channel, and I am only interested to long unless or until something fundamentally changes and or we get a major breakdown. And this is what part of the plan is, guys. You need to have a plan. If it goes up, I will do this, and if it goes down, I will do that, or I will do nothing. But make a plan in advance for both options. This is the euro yen. Euro yen on a daily. So we'd had major falls. We then had a consolidation period early part of the year, and then we looked for a breakout followed by a pullback. Then it moved down again. What's it done the last 3 weeks? It has simply been bouncing off this monthly 200 EMA, and it's been bouncing back up roughly off this monthly 55. Now I missed this. I was talking to one of the students the other day, and she'd missed it too, and even though I've been watching it, but that was an obvious area, and if it pulls back up again, that would be the area for me to take a short 131. Now, other options with this pair, it has broken this area of support and resistance. My only concern is it didn't break the recent low. So the ways to play this are, you could wait for a pullback around here at the 55 EMA at 128.80 area. The more conservative amongst you wait for it to pull back all the way up here. Or the final option, you wait for it to break and close below the recent low, and then you look for a pullback. And we had this the other week. I was showing this on the Aussie Dollar, New Zealand dollar. This is the pair on a weekly. This was a break of a major low. If you scroll back and see, this was the break. This was a Friday candle close, I seem to remember. And I was then looking for a pullback, which we got, and a short. And it did go 300 and odd pips. We got taken out later on, and I'll show you that in a moment. But this was the Friday candle pullback, breakout below a major low that went back many years, and then this is the pullback, and then this is a drop away. And what we were doing was following the candles down. So I think on the retrace we must have gone down to here, and we were pulled out on the retrace. But that was a major area. So again, when it pulls back, if it pulls back up to here, I would be interested to short. And if it was to fail, I would be interested to short yet again back up here, because fundamentally the Aussie dollar is in a bigger mess than the New Zealand dollar, and copper and ore have been tumbling yet again, and therefore that would be a short is the only thing I'm interested in at the moment. But those are the main areas for me to take a short on that pair. The British pound at the moment is very messy. And the problems for the pound is there is an election coming up, and it looks as though it's going to be a hung parliament. And if the Scottish nationalists get in, then it could have a disastrous effect on the pound. And because it's such uncertainty, then we had a scenario where price was going sideways. But again, look, you can see it's been range bound, and this area here was just below the all-important major psychological level of 150, and therefore it was a valid area to take a short. So once again, you were looking for shorts here and longs here. Now, had you longed this on Thursday, Friday, you would have lost. We've now made a new low. Because of the uncertainty, I am a bit wary with this, guys. Let's go on a simplistic chart. This is your simplistic chart. There's nothing else on, but we've made a new low. We could be resuming the previous channel. And I showed you a couple of weeks ago, I was showing you that one option with this was to wait for a breakout and a close below the triangle, and it's done it. For me, a more conservative entry on here, and I'm sure if I put a fib on this that the fib looks as though it will be significant. 61.8 fib is here at 148.30. So if we get a pullback up here, I would be interested to short. The more aggressive amongst you would look now and say, okay, we've broken a low anywhere around here, 146, 146.50 for a pullback for a short. But I'm just very wary. Watch the news as well. We have had a drip of negative news for the pound lately. So it could be that we're on for a further drop. The difficulty is the entry. I will have a look at that again during the week. Aussie dollar on a weekly, and I showed you this a few weeks ago, and I said, look, I would only be interested in range trading this unless or until it broke and closed below that major support area. And what's it done? Each time it's tried to break down, on this is weekly candles, guys, it has failed to break. We had MACD divergence down here, that suggests that price is going to go back up as well. So areas for me for a short, potentially around 78.50 yet again. If it was to break out and carry on upwards, I would leave it on the way up, but I would be very interested to short up here. Notice how the Bollinger Bands are closing, the EMAs are rolling over, you've got the 200 monthly here as well. This lot are all going to meet up soon. So if it was to pull back or drift back anywhere up around 8,300, 8,400 rather, 8,350, I would be very interested to short this pair. But this is a weekly chart and you'd have to have bags of patience to wait for it. In the interim, be looking at these areas. This is the same pair intraday with everything stripped off. And previously we had all these lovely breakouts and moves and flag patterns which were easy. And then we've had this lot. And yes, it's kind of bouncing off this 77, but I need multiple reasons to enter a trade, guys. And for me, it's just not strong enough at the moment on this pair. Similarly, this is the euro pound, and the euro pound was in a channel from May 2013. And all we were simply doing was shorting at the tops and half stake longing at the bottom. And I always half stake when going counter trend because it's more likely to fail. But you've got multiple winners here before we finally had one loss. And again, the channel, guys, here was 350 pips. So small stops, 350 pip gains. These are the ways to make money trading. When we finally got the break and this one failed, we then were looking for a pullback to, I think it was 75.90 we looked for. And in fact, if you look at one of the posts by members, long-term members, Judith and Robbie, they showed how they caught this perfectly to the pip on this one, because this was a breakout, M2, pullback and a drop. And at one point, this was up 500 and odd pips, 550, 570 pips. Now, I know they were taken out on the retrace, but that was an awesome move on the euro pound. I then showed those of you who missed it, you would look for a break and close below this 7,400 because price came down. It became support. It then broke through, pulled back, and the next candle and away. So 7,400 is a valid area. Personally, at the moment, I'm prepared, more interested at 74.40, 74.30 area up here because it's also an intersection of a fib and the trend line from before. So it's messy at the moment, it's mixed, it's up and down, it's all over the place. You could start to build a trend line area here, so you put on the support area here, and if it drops again, then you look for a break followed by a close, and I'd only do this on a daily candle. So I want a daily candle to close below, then a pullback with a view to a short. And the beauty of this would be there is a potential 230 pip drop to the recent low. Again, it's influenced by what's going on in the UK, and there are big euro meetings this week, including the Greek situation. And always remember those naughty Greeks, because if something suddenly happens that Greece defaults, then we could see this crash. So be wary with euro trades. This is the same pair, euro USD rather, on a weekly. Again, it's a bit messy. It's been bouncing around. This is an engulfing candle suggesting a move south, but it's not broken the recent low. Personally, I'd want to pull back on here, and if it was to pull back anywhere around 1010 again, and that was the obvious place last week, guys, 1010, 110, 1030. This is a major area of support and resistance. 110 is a psych level as well. It's also got your fib just above, so you place your stop above the fib, 50 odd pips away. You've got a potential move down here of 330. So 1 to 6 risk reward ratio, possibly 1 to 10 or 12. So that is the ideal area. You could be more aggressive and be looking around here, but it's been messy, so a little bit more wary. But 107 is of interest. 110 is, I would be in there heavy. Dollar yen, another messy pair. I showed you the other week. It had broken this trend line, and under normal circumstances people start to think of shorts, but I did say to you I wasn't going to do it because I had the feeling this was just going to go back up again, and thankfully it kept me out, and hopefully it did you. Now it's bouncing around off the 55, although it's broken it here. One option with the yen is often you get price will build up and build up in an area. It's a triangle breakout, so it could be that we're on for another break followed by a pullback. So that's one option. The other option is, in recent weeks, we were simply shorting counter trend at this top area, 121.50 area. It's not my favorite pair, and it is messy at the moment, but it is an option. And this is more clear here with everything else taken off. But this 122.100 would be an area for a potential short back down. And as I just shown you, if you were to break and close above here, or above, let's say 121, so you want a closed candle above 121 on the daily, then a pullback, then a move upwards. Other than that, you've got the Swissy. Now I'm avoiding the Swissy at the minute because of the SMB, and they bankrupted a lot of people a few months ago with this disastrous move here. So it does make me wary, but look how the 200 EMAs are interweaving. You've got the other ones here. We appear to be in an uptrend once again. So yeah, anywhere around 9,500 would be interesting, but do not over leverage yourself on this pair because it could kill you. Pound CAD. Now this is interesting. This is a pound CAD on a weekly chart. We have been in an uptrend. We are now in the downtrend. But is this a pullback or is it a breakdown? This is always the dilemma. Major area of support and resistance we've hit at the moment. And also on the weekly, I believe this is a 200 EMA. Yes. So you have 200 EMA here. Now, options with this pair. If it pulls back, the best place for me would be back up here, anywhere around 87, 87.20. And remember, this EMA is going to roll over and follow price down. So as this, if let's say this was to take a week or two to get back up here, you would then revise your entry tied in with the EMAs, etc. And again, if you fib this, I'm sure the fib will have some relevance. Well, fib around here, 61.8, 8,700 whole number as well. So I am interested to short this pair. It is a messy one because you've got the weakening pound at the moment and the weakening Canadian dollar. So you're not trading a strong currency against a weak one, you're just trading too weak. The other options, you could let it go below here and a pullback. The good thing about this, guys, is if it goes, it could go a long way because technically this 200 EMA is a long way away. And usually price does return to the 200. So I'm looking at it, I'm watching it. If it just breaks and closes its current position, then I would only take it on a daily candle break, and I would want a significant break. So I don't want it just a few pips below. I would want it to break, say 180,300, then a pullback, then a short. Other options, if that doesn't happen, is you wait for it to break and close below this 55, then a pullback, then a short. But certainly one to watch, so keep your eye on it, as with the Euro Aussie Dollar. And again, it's two weak currencies against one another, and the easier way to trade is to pick a stronger against a weak. But we're at a major area. This is a multiple double bottom here. It was significant back in 2013 as well, and it did it back in the summer of last year. It didn't break the recent low, and therefore that makes me wary. So options with this pair, you're looking for a pullback back up here when you've got this multiple reasons because you've got all these EMAs and recent support and resistance in place, or you're looking for a break and close. And again, this could go a long way because have a look at this. Back in 2012, we were all the way back down here, and that is 1,600 pips away, guys. Watch the Bollinger Band on the weekly at the market open. If it stays open, then it is more likely that price is going to drop. If it was to close, it would be more likely that price would pull back, at least temporarily. So, ways to play this one. Pullback is the preferred. Options down here. If the Bollinger Band stays open, you look for a breakout and a pullback. So a candle close on the daily chart, pullback for a short. If you're trading off the weekly, you would wait for this weekly candle to close below, then a pullback, then a short. Other options, you can be more aggressive and you would wait for a break and close below 13700 and then enter on a pullback after a break below there. So multiple options on this pair, but it is very interesting because the potential gain I've just shown you is 1600 pips away, guys, and you don't need many of those in a year to be highly profitable. Final one, this is the New Zealand dollar against the US dollar. been messy all over the place of late, but this area here now is starting to look very interesting. This is 7,900 or just below. You've got multiple EMAs. If we were to fib this, I think this is 78.6 by the look of it. 78.6 is in the area. So multiple reasons, previous support and resistance, a lot going on here. This is moving 100 and odd pips a day. So again, we then start to look maybe at putting some trend lines on here, but just keep your eye on it. Anywhere around 78.50 on the New Zealand dollar, US dollar does look tempting for a short. Okay, that's it for the week ahead. I will be back with you on Wednesday for an update. Have a good week. Trade safely.